What's up, guys? It's Migs with Market Open. Welcome to our first Monday Mentor session where I'll be covering a different topic every single Monday. Make sure to hit that subscribe button so you stay up to date with all the new content that I'll be putting out. In today's topic, we will cover what I personally use for resistance to be able to set my stops on day trades. Stay tuned. Alright guys, so the first resistance point that I'm going to talk about is going to be pivots. Pivots are basically a change in price, like a little bit of a dip, and then where the stock decides from selling off to starting to going back up. That basically, just that area where it's rounded off at the bottom is the pivot. Where buyers have decided to take over from the selling and the price starts going a little bit higher, and then in the opposite direction if you're going short. So now some of the examples I have on here for Tesla are some of the different pivots that are available on here. This was on the 13th. Now if you wanted to go long Tesla, let's just say here at the top of this little candle here at 219.26, the bottom basically of this pivot is down here in this area. I would probably have set my stop somewhere down here at 318. I probably would have disregarded this this quick dip down to the downside past VWAP and set my stop down here. And then as well as later on during the day, right around 12:40, 12:45, we had another little dip right here. It's just kind of a rounded off section. If you wanted to go, you can go long over 320 and then just set your stop down here at the bottom of this pivot. Now, it also works with cheaper stocks. You'll notice that Tesla is $300+, but it also works with cheaper stocks. Now, FTFT was one of the runners on Friday. It was up, I think it was like 70-something%, but it actually faded off most of the day. So as you can tell on here, there was a high, and then it kind of sold off. There was a pivot here. There's a pivot here. You could have shorted it somewhere around here. And then with your stop either top of this pivot or the top of this candle. Then there was another very clear pivot, and you wait for it to dip down under the 9, and then you set your stop here at the 370 mark, and then just kind of faded and faded and faded for the rest of the day. Now the next one that we're going to cover that I also use as a resistance and support actually a lot, since I do a lot of VWAP projections. Let's see here. Actually, no. I have a screenshot from an earlier play late last year on 2017. It actually shows pretty good resistance up, and I'm actually going short on this. So FL, I think, had a bad catalyst on some sort of news. I waited for it to pull back up basically to VWAP because I ended up actually missing all of this. Also, if you notice, this is a 5-minute chart. All the charts that I'm going to show you guys today is going to be on the 5-minute chart. Now, here it actually came back up to VWAP and it got rejected, and it threw up a reverse hammer. If you guys don't know what a reverse hammer is, I also have some other videos regarding candlesticks as well. So you can set actually your stop here at VWAP. As you can see, the very next candle sold off. And since VWAP is actually a moving indicator, it will actually start trending down as well. So then your stop gets smaller and smaller and smaller. Now, so that's a short I took on FL. Then I have another example here on my other monitor from a short I took on Sage as well from last year around the same time. So also you can notice on here that there's also some pivots that you could have used, and some 9 EMAs that you could have based your risk off of. So Sage also had some negative news, and it sold off immediately, came back up. It threw a little bit of a pivot here. You could have either used the 9. But this specific pivot is not actually the one I was referring to. So this one actually right here kind of marks it perfectly. It pulled back up, and then it went right to VWAP, and it started coming back. So once you notice that the tide's kind of turning and it starts selling off, then that's where you can start going short and set your VWAP as your stop. So if it pops up and over VWAP, that's where you want to get out. So you have a definite place where you can set your risk. Now, something else that I use quite a lot actually, so it's a previous candle. So you'll always hear me say next candle to make a new high or next candle to make a new low is my entry. So this was actually a runner because of some tariff that they're putting on steel, U.S. Steel Company. And now this is a perfect example of a bull flag. So a bull flag, here is the pull. It pulls back slowly on lighter volume. And next candle to make a new high is my entry, and my stop is at the bottom of that candle. So my entry here, the high on this was 41. So my entry here would have been 41.01, and then my stop would have been the bottom of this candle. So low is 40.71. I would have had a 30-cent stop, and entry would have been here. I could have gotten 2, 3, 4, 5 to 1 on that trade, because as you can see, it actually kept running higher and higher and higher. Now, it's very important that you have a set stop. You don't want to get into a trade and just kind of let it do whatever it wants, because that's how you can lose money uncontrollably and you don't really know when to get out. So you have to have a plan when you first get in. You want to know what your entry is, what your stop is, what your target is, or you could also be taking a partial, or you could be taking out the whole amount. So the next one, let's see here, CMG. CMG was actually something I believe that ran on Friday as well. Actually, here's a perfect flag. So it goes up, pulls back to the 9. Very next candle to make a new high is your entry. So right over here over 297.34. And then your stop is right here 296.20, a little bit more than $1. As you can see, it ran here from all the way from 297 all the way up to 305. 306, yeah, for that day. So you would have been able to make 2, 3, 4, 5 times your risk on your initial entry on here. And let's see here. The next one is actually whole number arbitrary, like 50 cent to $1 entries or stops. So NVIDIA is actually a really good stock to use for this. So because it's a higher price stock, and it respects those whole numbers and half numbers a lot. As you can see on here, just at the very beginning of the day, it came up, it kind of consolidated a little bit for 15 minutes, and then it broke over. So you could have used 235, here's your stop, or you could have used the bottom of this candle as your entry up here. Actually, you could have gone in at 236.51, and then your stop could have been down here at 235, so about $1.50 stop, or you could have used an arbitrary dollar stop if you wanted to, so 235.50, just so you don't lose any more than that. Also here, something else I wanted to point out here, you can see it consolidating all the way across right under the 238 area. You could have chosen to gotten in a little bit later, 238.16, but as you can see, it's actually starting to curl up, and it's actually starting to hold. The 9's actually curling under it. So this area right here, so I'll mark it off for you guys. So here, this is kind of the consolidation. So just this area. So from 237, your entry could have been 238 if you're trying to get in a little early. You could have gotten in at 238.25, or at the complete top of this range here at 238.35, and then you could have had an arbitrary $1 stop. So down here, as it's curling back up, you can expect it to not pull back, because what that means is that the buyers are getting more and more and more aggressive. So you don't expect it to pull back a lot. So if you would have gotten in here at, let's just say 238.25, right? You expect it to break over the high here at 238, what is this candle? 238.34, you get in a little early, you put your stop here a little bit more than $1 away, 237 at the whole number, and would it have worked? So if you keep scrolling up, you're at 239, 240, 241, 242. You know, you could have gotten multiple times your risk. Or down here, you could have gotten multiple times your risk just by having an arbitrary dollar stop on that. Same thing works with 25 cents with smaller name stocks like Kodak, Riot, Mara, all those things that have been running due to the blockchain. You can use an arbitrary, I know some people use like a 10 cent, 20 cent, 30 cent stop. You can do that as well for lower price stuff. and it all basically works the same. It's just I usually use the 50 cent to a dollar. If I don't have a definite stop, it's a lot of the times it's not necessarily a little bit riskier. It's just that it's curling back up and you don't have like a good place to set your stop. Like, yeah, I could have used this pivot here to set my stop, but that's kind of far because I don't expect it to go all the way down there if the buyers are actually starting to get more aggressive. So you can see that they're actually starting to push up, 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 and up, and I don't expect it to sell all the way back. So I don't have to put my stop all the way down there, especially if I want to try to make some decent gains out of it. So I'll take a little bit more of a risk on maybe setting a smaller stop of 50 cents, but I think a dollar stop here would be plenty for it. Since if you were to get in somewhere around the 238 and it ran all the way up to 242. So you're making over $4 on something like that where you have a small arbitrary $1 stop. Hopefully that makes sense to you guys. Those are my personal preferences on what I use for support and resistance. So obviously you would flip it if you're shorting as well. So it's literally exactly the same. There's no difference. So if we were to flip this short here, and let's just say that this is selling off, we would actually go short somewhere around the 237 or 236.60, basically exactly the same, just flipping it 180, and then your stop would be up here at the 237 or 238 mark, and then you're just waiting for it to fade off, and hopefully that works out for you. But it's just literally exactly the same whether you're going long or short. It's just you have to flip it in the other direction. So hopefully that makes sense to you guys. Make sure that you guys do subscribe. I'll be putting out some new content out every single Monday. And then also make sure that you guys are following us on our Facebook, because I'm actually getting the ideas for some of these new topics that I'll be covering from all the people and all the questions that people have in the Facebook group to be able to help you guys out. Another good positive to also be in our Facebook group, besides it being completely free, is that I actually do post my watch list on there for you guys to be able to benefit off of every single day that the market is open. And I know that that is actually very helpful for a lot of you, since you guys do appreciate it and you guys give me a thumbs up or some good comments on that section whenever I do leave my watch list up, and you guys are able to profit off of it. As always, if you guys have any questions, make sure to leave it down in the comment section. And if you guys do understand what I just explained, please leave a comment down in the comment section below saying I understand. Or if you don't get something, please make sure to leave it down in the comment section as well, and I will address it as soon as I can. And I will talk to you guys next time. Peace.